Hey everyone, it's Ed here from Edonomics. I wanted to make a quick video about the UK housing market now that the new stamp duty's kicked in. I thought I'd have a little look around, see how it's affected prices and sentiment and stuff like that. So I started Googling around. First thing I came across was this article from The Independent. Headline reads, Housing bubble has burst as sellers slash asking prices by an average of £25,000. This is up from £4,000 in January. Sellers were giving around a £4,000 discount average. Now they're giving a £25,000 discount average. The data comes from property site Zoopla, who claim that 29% of the properties on their site had their asking prices cut at least once. And Henry Pryor, a housing analyst, said, I think the housing bubble has popped. He said he had worked through 3 property recessions and that this market had a very familiar feel to it. So one of the contributions to this has been the increase in stamp duty on buy-to-let mortgages. This was raised to 3% starting April the 1st, 2016. When a tax is raised like this, it normally causes people to get emotional and rush into the market before the new tax takes effect. The Guardian reported there was almost a 60% increase in buy-to-let mortgages in the lead up to the April the 1st stamp duty rise. So the Brexit's the other thing that's on the table at the moment. I think people are a bit nervous about getting into the market. They want to see what happens in June, see what the result comes out as, and then make a decision on whether they're going to buy or whether they're going to sell. So that's going to stagnate the market between now and that decision coming through. I think property and equities now have got to such an inflated amount, which it feels like that's where all the printed money's gone, or the new money that's come into existence, the bailout money, all the commercial bank money. It's mostly gone into property and stocks, and that's your inflation. People are like, where's the big inflation from all the money printing or the quantitative easing? Well, it's there in front of you. It's in the stock market. It's in the property prices. There's your inflation. And I mean, food prices have gone up as well, and oil prices are starting to go up, but it's out there. It's definitely out there. So to conclude, I do think we're at the top of a market here. It doesn't feel like it's going to be going up anymore before it starts going down. And the question is, how far does it go down and how fast does it do it? No one really knows that. But I think things will start to deteriorate over the next 6 months, 12 months, 18 months. And at a certain point, the banks and the larger corporations will then head to government and ask for another bailout, which is always nice for them. It's a shame that the rest of us can't get one when we need it, but we definitely need to make sure that we cover all their dodgy bets. Okay, thank you so much for listening. Edonomics signing out.